What's good? It's your boy E, coming at you with another quick one regarding the markets. And I told you shit was getting bad. And I don't know if you people understand or even care or feel that it has nothing to do with you. And if you feel that way, I'm sorry, but you're in for a pretty rude awakening. Basically, the whole global economy is collapsing. In other words, if you live anywhere on the planet, this one right here, you really need to pay attention and understand what's going on around you. And that's why I'm here. You're welcome. CNBC had this on their ticker tapes earlier when I was making this video or recording this video. And even at that time, the Dow and the markets in general were making even lower lows. I would only assume that things are even worse by the time you're getting this content. Also, the same thing in Europe. What about Asia? Guess what? The same thing. The fact of the matter is, no matter where you are in the world, every major equity index is down and continuing to break down to new lows on the year. And it's simple. Investors and everyone else knows that we're basically headed for a complete economic meltdown or a slowdown at the least. And at the opposite end of the spectrum, like I said, a complete economic meltdown. We've seen every currency one after another break down, and still there's people out there that somehow think that everything is still peaches and cream. Central banks around the world have been raising rates in lockstep to a degree that we haven't seen in over the past 5 decades, so 50 years. And it's a trend that's likely to continue well into next year. This is World Bank President David Malpass. Global growth is slowing sharply, with further slowing likely as more countries fall into recession. My deep concern is that these trends will persist with long-lasting consequences that are devastating for people that live in emerging markets and developing economies. Now, take from it what you will, but what I can tell you is that it's not looking good. Okay, you think raising interest rates are bad? Let's look at a country that isn't raising interest rates. Turkey is cutting interest rates again as the country struggles with just under 80% inflation. 80%. Japan is buying up its own yen for the first time in 24 years. This rare intervention was the latest example of global concern triggered by the strong dollar, which has gained ground on the back of the Federal Reserve's interest rate increases. One nation hit by the fallout is Japan, which is the world's third largest economy, which has to pay more for essential imports of oil, natural gas, and food. These imports are usually denominated in dollars, but are now costing more in terms of the yen. All right, so what's going on here? Well, as the U.S. tightens monetary policy here, the U.S. dollar is getting stronger compared to other world currencies. Look at the U.S. dollar index. The USD went from losing value to now gaining value relative to other world currencies. The same day as the Fed meeting this week, the countries that immediately followed suit and raised rates were Japan, Switzerland, the UK, Norway, Indonesia, Taiwan, the Philippines, and South Africa. Argentina just raised rates by 550 basis points to 75% interest rates. So imagine taking out a home loan in Argentina right now. And Argentina has an interest rate that's like 90%, damn near 100% right now anyways. Here are other central banks that have raised rates pretty aggressively this year. Saudi Arabia, Poland, New Zealand, the Czech Republic, Israel, South Korea, India, Chile, Mexico, Canada, Brazil, Indonesia, and of course, the European Central Bank, which controls the euro. The euro is also one of the world's bigger currencies, along with the pound and the dollar. Speaking of the pound, the Bank of England has raised interest rates from 1.75% to 2.25%, the highest level in 14 years, and warned that the UK may be already in a recession. By the way, look at what they consider the definition of a recession to be in the European Union. A recession is defined as zero or negative growth of GDP in at least 2 successive quarters. And in the United Kingdom, it is defined as negative economic growth for 2 consecutive quarters. So it looks like they're still going by the old definitions. I wonder why they thought it was okay for us to all of a sudden change the definition of what a recession is. So basically, when their numbers come out, they're going to be declared basically in a recession along with all other countries, and basically we're going to be in a global recession at that point. Inflation, the rate at which prices rise, is at its highest rate in nearly 40 years, leaving many people facing hardship, and prices are widely predicted to head higher going into October, despite a government plan to limit soaring gas and electricity prices for households and businesses. This is the British pound compared to the US dollar. That thing straight fell off a cliff, bro. Like straight down. So whether you're looking at the strongest economies on the planet or some of the weaker economies, to be honest, they're all pretty much struggling. And as the most powerful banks, aka the central banks, raise rates, it's creating a global shift in capital, while at the same time we're seeing a global economic collapse in production and activity everywhere. Countries were already dealing with massive inflation from all the money that had to be printed due to the pandemic, and also the collapse of the supply chain, basically stemming from the same thing, the pandemic, and also the massive energy crisis and the overall shortage of goods and services. The Wall Street Journal reports that around the world, trade volumes are sputtering and inflation is crushing household and business confidence. China's housing market is cracking, while Europe's energy crisis is hammering factory output. The UK is unveiling the country's biggest tax cuts since the 1970s, a measure designed to kickstart growth, cause a slide in the pound, and jumpstart government bond use. These are the narrow options governments face as they try to combat a toxic mix of low growth and high inflation, aka stagflation. And this is global stagflation, basically a global economic collapse. And to tell you the truth, it's going to be nothing nice. And to make it worse, we're basically just in the beginning stages of it. Anyways, my G's, that's basically all I have for you right now. Again, just bringing you the information that's important, and also the information that can help you put yourself in a position to come out a winner and not a loser when this thing is all said and done. Just because things are looking a little crazy right now and we're basically going into a recession doesn't mean that there isn't money to be made. As a matter of fact, during the last few recessions, that's where the most new millionaires actually came from. You just have to put yourself in the right position to take advantage, and not in a position where you're basically left helpless and could end up losing everything. Again, if you like content like this, content that can actually help you get ahead in the market and gain an edge, and also help you get ahead in life, go ahead and hit the like and subscribe button, hit the link and slide over to my Patreon where you can sign up for the daily morning briefing. That also gives you access to my private Discord server where we are in there getting money every day. Just look at Facebook, or now Meta, as an example. Mark Zuckerberg's net worth was nearly $110 billion, and that went from $110 billion down to $50 billion. Just on that swing to the downside when the market sold off and we started heading into this recession. Where do you think that $50 billion went? It didn't just disappear into thin air. That's what you would call an exchange of wealth. And what I'm trying to explain to you is that if you put yourself in the position where you're able to take advantage of wild swings and inconsistencies in the market, such as that, and basically educate yourself financially and become financially literate and just apply yourself and learn a little bit about finance and the stock market, you could put yourself in a position to go ahead and get your piece of that pie. $50 billion is a lot of money. That's a lot of pieces of pie. And trust me, a lot of people got pieces. And again, that's what this is all about. That's what I'm trying to put you guys on to, trying to put you in a position where you can go ahead and get your piece of that pie, then grow it exponentially. And then it becomes generational wealth. So like I said, don't forget to like and subscribe. Go ahead and hit my link, slide over to my Patreon, sign up for the daily morning briefings and watch lists. And again, what that does is gives you access to our private Discord where we're in there getting money every morning. I'm in there every morning with my team, and we're in there going over the morning briefings, the watch list plays that are looking good, high probability plays to go ahead and create that third, fourth, fifth stream of income, or maybe your first stream of income. Doesn't matter how many streams of income you have. What I can tell you is it's not going to hurt you to add another one to that. And again, I'm in there every morning. You feel me? That way we can all gain financial freedom and create generational wealth. And also, the community is growing fast. It would behoove you to go ahead and get in there as soon as possible. That way you can hit the ground running. Again, I have the daily morning briefings, the watch list. We're going over plays that look good. And I share my screen in there with you guys to give tutorials, key levels, and what plays we can take that have the highest risk to reward, and or give you an edge where you can create that second or third or fourth stream of income. Anyways, my G's, holla at your boy.